In the financial landscape this week, Tesla, the electric vehicle pioneer, clung to its trillion-dollar market cap status despite a dip following weak earnings and Elon Musk's warning. Despite trading at 182 times estimated earnings compared to an average of about 30 for other tech giants, Tesla remains amongst the likes of Nvidia, Microsoft, Apple, Amazon, Alphabet, Meta Platforms, Broadcom, and Berkshire Hathaway. With retail investors holding more than 40% of its shares, the stock is about 2.5 times more volatile than the other 8. However, Tesla's focus on artificial intelligence, particularly in self-driving cars, sets it apart as a key player in the AI sector, according to Futurum chief market strategist Shay Bollower. In other news, Japan Prime Minister Ishiba managed to maintain his position despite his party losing its upper house majority. U.S. inbound container shipping saw a 7.9% decline for the second consecutive month in June. Treasury Secretary Scott Bessent called for an investigation into the Federal Reserve as a whole. Stocks edged up, with the S&P 500 and Nasdaq Composite hitting new highs. The White House announced a Japanese trade deal involving 15% tariffs and $550 billion in U.S. investment. This led to rallies in Japanese and European auto stocks as well as meme stocks. Key earnings were released, with some companies like Coca-Cola and Alphabet beating expectations, while Tesla fell short. Microsoft warned of cyberattacks against its server document management software SharePoint, blaming Chinese hackers. Stellantis reported a $2.7 billion first-half loss due to U.S. tariff policy, while General Motors took a $1.1 billion second-quarter hit from the same issue. Block joined the S&P 500, replacing Hess acquired by Chevron. The Federal Communications Commission cleared the $8 billion Paramount Global Skydance merger. This week marks the busiest of the second-quarter earnings season, with over 150 S&P 500 companies set to report, including 4 of the Magnificent Seven. Second-quarter earnings season has gotten off to a strong start, with more than 80% of companies beating earnings per share estimates so far. The Federal Open Market Committee is set to announce its monetary policy decision on Wednesday, with a 4.25% to 4.5% federal funds rate expected to remain unchanged. Wall Street will be watching for dissents from Fed Governors Christopher Waller and Michelle Bowman should the central bank opt to hold interest rates steady. The Bureau of Labor Statistics is set to release the July jobs report on Friday, with economists predicting a 106,000 increase in non-farm payrolls and an unemployment rate edging up to 4.2%. Finally, the number of new exchange-traded funds launched in the U.S. this year through June has reached a record high. The Congressional Budget Office's final call on the 10-year deficit from the Big Beautiful Tax Bill is also awaited. The percentage of households in Silicon Valley controlling over 71% of the tech region's wealth, the fall in new credit card openings from 4 major lenders in Q2, and many more numbers make up the financial narrative for this week.